what has been your sort of understanding? What has been your takeaways from these relationships, customer relationships, client relationships, which have been there with you for years?
20 years, 25 years of my life. I can say that the free cash flows today are good enough for most expansion that companies have. 10, 15, 20, 25, 30% expansion by adding some balancing equipment, some modernization, some small plant. You can do without going anywhere.
Hello, Mr. Kamath, and thank you so much for speaking to us. First of all, many, many congratulations for this Lifetime Achievement Award. It was a very, very clearly unanimous decision by the jury, and we decided that there is no better person who is deserving of this award than you, given your absolutely illustrious, defining career, which has shaped a lot of India's financial system itself, and of course, corporate India in many ways. Keshav and I, we will, first things first, we wanted to, ask you about the initial years, growing up in coastal Karnataka, the way you have seen the world and from that lens. How has that sort of impacted? You're known to be a very simple, very, very humble person. How has a lot of that impacted you? You're growing up here. Tell us a little bit about that.
Thank you, Sourav. That goes back many years now. Growing up in Bangalore, a very small city, 1.5 lakh people during most of my growing years. Then, as it happened, I went to engineering school there, what's now the NIIT. And those days, my parents had a tile factory making roofing tiles. So my dad was also busy in politics. He was the mayor of Bangalore. So right from my second year in engineering school, maybe 1965 till I graduated, I would look after that tile business also. So in a way, that's my first immersion into an SME, what the challenges are, how do you manage a cash flow, how do you make sure that you earn something at the end of the day, and so on. So that was like a crucible of learning for me. My father always, both my parents, stressed on education. So when I said that I want to do a master's in business administration, it was readily agreed to. So I moved to Ahmedabad to do that. And then I said I would like to follow a professional career. That also, my parents were very happy to let me do that. So that's how I took a turn in my career, as it were. The initial years, it was as a typical in a small town. Look after your parents' business and grow. So IIM Ahmedabad was a turning point in a way. And ICICI was serendipity, because through the placement team, had applied for several places, 4 or 5 places. My interest was by then finance, so in the financial area, despite being an engineer. And I was getting offers. And then one day, one of my finance professors, Professor B.G. Shah, said, give me a copy of your resume. I want to send it to ICICI. So I didn't know what ICICI was. So I respected the professor a lot. So I gave him my resume. And a few days later, I had a call for an interview in Mumbai. They didn't come to campus. And I was the only one, I think, whose resume was sent. And I got the offer. And I think my first impression itself for ICICI was in a way sold. Because it was a company at that time, or development banking institution, less than 1,000 people, probably 600 people or so, in one building at opposite MLA hostel. And it looked to be entirely professionals. Everybody worked with their hands into the profession. And I accepted and it turned out to be right. And probably, if then I look back, look at that point in time and look forward, this was 1971, to 55 years since then. That was the next big turning point, that I went into ICICI, because the atmosphere that was there, plus what you learned there. I had a master who taught me, that was Mr. S.S. Narkani. At that time, chief of projects. He looked after projects. And I was one of a team of 10, 12 people. Then he became, general manager. Then he became, in due course, he became chairman. And as his career progressed, in a way, my career also progressed. He got me to work with him as his executive assistant by around, I think, 81 or 82. And one day he said, let's start a leasing business, and I'm going to arrange with an institution in the UK for you to go and get trained. So you go for 6 months, get trained and come. So things happened like this. And that's how, I got to set up my first, in a way, individual business in 82 or 83. And that's also where, in a way, my interest in technology happened, because when I came back, I said, I want a machine to run the business. And not run the business, but to do all the back office work, as it were. The small desktop 8086 or 8088 machine. With floppy disks is where we started. And that segued into a lot of other things. And quickly cutting to 85 or so, when Mr. Kani moved to IDBI as chair, Mr. Wagul came. So there was another progression on the same path. Tremendous learnings, a builder of, again, new things, willing to experiment. And he called me one day and said, just month or so, leasing is now set. I want you to set up something new. Let's set up a strategy department. So I said, okay, no staff. In due course, 1 or 2 people are joining. They said, you also take over treasury. So treasury also is a small 3 or 4% treasury team. So these 2 things started. But then you could innovate. With these 2 things with you, you could innovate. You could look at new institutions to be created. So most of the things that ICICI built later on, the seeds were actually sown between 80 to 83, Mr. Narkani's time, and Mr. Wagul's first few years. And then again, serendipity. We got, ADB asked me through somebody that, would you like to join? So initially I did not make up my mind. I talked to Mr. Wagul, he says, we'll decide. But finally in 88, he said, you should go. And you keep a lien and go. So I kept a lien on my job for 2 years. And around 1990, he said, you decide whether, first you extend it by 1 more year. So I extended my lien by 1 more year. And then in 1991, he says, now you decide. So I said to myself, maybe I'll work a few more years in ADB. So that's how went on till 1995. So that was also in a way serendipitous. I had not planned, I had not applied. So once he gave a nod to early lien, then I actually put in my papers. They processed it pretty fast. And then again, one more serendipitous thing. And we'll say end of this that, and I have not talked of serendipity in my career at all to anybody. So in a way, the first time I'm also thinking. So in 95, maybe April or so, I get a call from ICICI saying, Mr. Wagul is coming to Singapore. He'd like to meet you. And I was in Jakarta then with ADB. After first 4 years, I'd moved to Jakarta. So I said, sure, I'll go and meet him there. So I went to Singapore, and in the first 10 minutes, he said, next year in July, or May, I'm retiring. So I want you to consider taking over as CEO. Good. So, that was what you aspired for. So I had no hesitation in saying I will join. And he said, you join the board now, that is in a year earlier, in June of 95 or so. You come for the meetings, and then by then I had actually stepped out of ADB, because I had said I want to spend the last 1 year to understand other businesses. So I was working for a private entrepreneurial group in Jakarta. And I could come and meet the board every month. So in a way, it was again not.
And you joined the board by then?
Yeah, I joined the board in a year earlier. I think June or July 95, I joined the board. And we had regular monthly board meetings. So by the time I took over, I knew the board functioning. I knew in a way, how things were and so on and what you had to do. So, and a complete hand-holding exercise in terms of understanding things and so on. And the final lesson, in a way, that from Mr. Vagul was when he stepped down, that is in the May of 1996, I took over. He says, I'm going to the US for 3 months or 4 months. So you look after it yourself. So that has stuck in my mind as a lesson that once you hand over, don't be around to get other people to speak positive or negative about the incoming CEO. You don't be on the scene at all. And that actually allows you to grow tremendously fast. So, a lot of learnings on this front. And then, of course, the rest of it is recorded. You, all of you have seen what happened from 1996 onwards.
But sir, you have in what you say serendipity, of course, but you have also had 2 or 3, definitely 2 very, very iconic mentors in that sense, both Mr. Nadkarni and Mr. Vagul. So what do you think, how important is that to allow somebody to flourish like you?
Foundational. I don't think I would be a fraction of what I am if I had the same opportunities but with different leaders. I say it without any doubt at all. See, Mr. Nadkarni gave me the foundational thing.
Yes.
What is Project Appraisal? And that's basically what has built me as a professional over the next 50 years. And he himself was so thorough that you could not but pick up from him. So those 15 years were coaching and getting trained to do this. Mr. Vagul was the ability to how to delegate, how to think new, never stop thinking, experiment, and going on that track, as it were. So both combined, I think, in a way shaped who I am.
And the fact that he kept asking you to keep the lien on the ICICI job meant that he had bigger plans for him.
Indeed. I can now look at that as something that was troubled in his mind. And then 3 years later, it is 91 million expired. 4 years later, out of the blue,
you're the CEO.
Just coming in and saying, take over as CEO.
So could you just step back and say from the from someone who grew in Mangalore, running an tight business, then going to IIM, then coming to ICICI, it was like what was the personal journey, in the sense that the way you pursued the business world then, and then to have an helicopter view from ADB, if you could define some anecdotes.
Very interesting question. See, till I left Mangalore for IIM, my worldview was that basically I will probably pay attention to running an SME, a very small SME at that, and scale it a little bit, but not because opportunity was not visible. And a lot of times it is the invisible opportunity to scale, but it is not visible. But small business, yes. I think once you went to Ahmedabad, the interesting thing was most people who came there, my classmates, were also from small town and also did not have a worldview. And if you look at India of the 69-70 period, 1969-70 period, there wasn't anything really that big in a small town. The factories were all in specific places, and so the helicopter view actually came after I got to ICICI. Even during Ahmedabad days, you got what I call core underpinnings of maybe business, maybe a subject matter that was taught in school. But ICICI actually opened my mind, and in a way it was a complete 360 view of what business is, because right from month one, the first month, you went on a factory visit or a site visit, and you had a project in front of you. You were learning what to do, and you had great mentors. So you were handled through the process. So that's when the first helicopter view happened, and then it didn't keep stopping. It just went on and on and on.
So when Mr. Vagul then said he's going to the US and you took over, and he said that you now do it yourself, What were the first few things which came your way, and how did you navigate those?
Yeah, there were 2 or 3 things that happened. See, ICICI, not because of anything that was a challenge to that institution per se, it was a challenge to all the development banks and the banks. That was opening up in the 90s. So businesses were coming under pressure. So it was very clear. Because you could see that competition was getting to be a different order. So then other challenge that we found was technology was coming in at a great speed. The third challenge was you did not have capital. You did not have equity, nor did you have the funding available. Because not many people know, but around 95, 96, till 95, 96, for 50 years of our ICICI existence, that time 40 years, ICICI, IDBI and IFCI used to get a government guarantee to raise bonds. And these were considered SLR securities for banks. So they subscribed. Suddenly, in 1995, before I came in, they withdrew that facility. So now, 96, you got your customers in challenge, your funding is in challenge, and you find your equity is not enough for the sort of structural things here. So I had 3 things to do. And you also found that, which meant that you had to set up new lines of business, new sources of funding, and raise capital. Then we found that you had, as I said, a good force who worked with us from 1955 or so. But by 1995, 96, to face the challenge, you needed a new set of people. Mr. Wagul, during the 88, 96, actually we first started formally recruiting from the IIMs and other places in 85 or so, after Mr. Wagul came. Till then it was a referral, like in my case. So 85, I remember I was the first one to go out and recruit from campus. So that continued over the next 8 years, or 10 years. So in 96, when I came in, there was a good crop of young people, professionally qualified, either as chartered accountant, business professionals, and so on. So the raw material. But you also had older colleagues of mine who, for the change that we wanted, were probably not able to. So the other challenge was to actually give a golden handshake. That was the most painful, I think, thing in my life. People that I grew up with. So you had to, but we managed a golden handshake, which we thought was fair. So 3-4 challenges together. People, then technology was happening, raising capital and making sure the lines of. So that's where the ICICI brand got created, to be able to go in the market and raise money. So that's not through the bank. This was for ICICI, the limited, the parent, the Industrial Credit and Investment Corporation Limited, ICICI for short. So we did that, and my colleagues, the younger team, could put together plans to raise money. We raised that. First, we raised the debt. The domestic market used to be bond issues, 6 and 7 year bond issues, no government guarantee. Then when we realized that we now needed equity, in 98, I think, we went to the NYSE to list, got an ADR done there.
Yes.
And that was in the path. I wouldn't call it serendipity, but it was a change in path.
But that was a major event.
A major event. And then, it's around that time we also realized that the bank was a subsidiary, that we will now have to merge the bank and the parent for the simple reason. The parent was about 4-5 times the size of the bank. But the banking license is in the bank, and that's where you can raise resources. So we had to do a reverse merger from the parent into the bank, which you have covered in detail. So that, I think...
and that was one of the first reverse mergers. I think it was the first reverse merger in the reversing merger.
By then, of course, 2 things had happened. We had positioned the bank as a technology-driven bank. So first the internet, and along with the internet came the ATM. And then every single thing was based on technology. A branch was only a sales point. All the other work was done at the back office. And of course, in 2-3 years, The back office also vanished because things became straight through. So I think thereafter, we grew with technology. We grew with India because the real growth came in post 2000, that period.
Yeah.
So we grew with the story of India. We grew with technology because new technology came in at that point in time. And personally, then I've tried to stay with technology throughout because I thought that was going to be the changing, the constant which changes, but it's going to be there. You'll keep changing. So you had to grow with that constant.
So the period of transition, that when India opened up and the fact that you had to look at a different, existence, in some sense, it was an existential crisis for the
Everybody.
Yeah. So who was the sounding board? And, you had your exposure at ADB, but did you reach out to someone to understand, this is the path and, this is the reversement? Was it all so clear the way you're articulating it today? Or it was a turmoil?
It was not clear at all. It was tremendous turmoil. But there was somebody who was outlining the shape of things to happen and how you need to transform. There was Professor C.K. Prahlad. Professor C.K. Prahlad was then, of course, at Michigan. And he would come down to India every year and hold a 3-4 day seminar in Bangalore, which about 25-30 of the top industry leaders attended. And that put you through, I would say, that crushed you in terms of what you are not doing and what you need to do. So it was a crushing experience, but you came out that much stronger. Mr. Wagul was attending that earlier. So 96 was the first time I attended that with Mr. Wagul. He was also there that year. And then I won't name names, but almost everybody who was at that time a major house in India, professional or private sector, was there, about 25-30 acres. And that gave you an idea that things had to change. So a lot of things he pushed. He pushed technology, he pushed the change of things, thinking scale, going global. So all these, in a way, if you see 2000, a whole lot of Indian companies went abroad. I would credit C.K. Prahlad for pushing that. And again, thinking of your ability to change, and that is another thing which has helped me and the institution shape the later years. It is very interesting. It'll take 1 minute. So one afternoon, C.K. Prahlad came in and said, "This afternoon's class we will run. It will be run by a professor from Michigan, Professor Brockbank, and it will be on not on what I talk, not on strategy. It's on other things." So professor comes in and Brockbank comes in and says, "I have only 3 questions, and then you guys will decide how the class goes." He says, "How volatile is your environment?" 1996, and things are falling apart. Scale of 10 highest, 10. How competent are your people? Scale of 10 is highest. People think 8, 9. He says, "Okay, that's not bad." He says, "Think over this carefully. How inclined or how is the mindset of the organization to change? How capable of change is your organization? How capable of change are you as leaders?" Then people started thinking. So the other 2 answers came in 1 second. This one started thinking. And then I started thinking. Anything that I was trying to do in those first few months, I find slow, doesn't change. So everybody started calling out numbers. 5, 6, 7. Nobody went over 7. 5, 6. So 6 was about a thing. So I blurted out 4. So Mr. Wagul, actually I remember in a fatherly way, he caught my hand and he said, "I think we are 7 or 8. So I told him, "Sir, that was the organization you ran. The organization that now, because this is now the forces the land faces, is going through a big change." And so then Professor took us through what is change, how do you implement change, the need to, drop baggage. And that's where, in a way, golden handshake came out, technology came out in our case, new businesses came out. Because we said, and people laughed at us. we said we are not going to do necessarily only project finance. We will do corporate lending. We will do other things. And then we said that we acquired two companies were not doing too well in the retail space. Again, he knows, but not many people know. We bought a company called ITC Classic. And we got a company called Anagram. They were doing retail, but they were running into problems. And we had to learn because we didn't know anything. So we acquired them. So it was basically getting off from your comfort zone and doing things. That's what Professor C.K. Prahlad, and he didn't tell me, do this, do that, do this. That we went there. And then realizing that to do that, you need capital, you need equity, you need technology and so on. So I would think if a third person I had to pick, other than my two mentors, would be C.K. Prahlad.
How did that people, because people like you worked, Vagul said that, you are 7 and clearly you didn't feel that it was, it was 4. Letting go of people is a painful exercise and, a lot of them were capable. You gave your answer as 7 to 8, but when you decide whether they are the right ones, it was 4. So that means you had to kind of break it out to them and say that you guys are not.
Yeah, it was question of for the time, 1997 or 97. We implemented this in 97. With the changes happening, this decision had to be. And I said, it was the most painful decision because a lot of my close friends, who might have been a year or two senior to me, were people who were we gave a golden handshake. And I can say that most of them are still friends with me. If I can talk to somebody, it is people from that period because they don't know my later, I think they know me as a person 1970 to 1995. So that was painful, very painful.
So one thing we've known you for, as you rightly said yourself, is technology. I mean, you were one of the first adopters in that sense, very aggressively in the banking sector when ICICI Bank and ICICI and then ICICI Bank adopted technologies in a big way. What made you think that now banking is not going to be done the way it was and it is going to be a completely new paradigm?
I think that again, I go back to my technology exposure started, as I said, in 1982 when I went to London to study leasing. So there was some sort of a machine being used and some code serving, but everything was opaque. You didn't have the machine there. The machine was plugged in and you worked on it and so on. But I knew that you could get a code from a machine. So in 83, as we were setting up the business, I realized that working with a calculator, by then thankfully there was an electronic calculator that happened because I started my career with mechanical calculators. You can't comprehend what it is. It is a 5-pound piece of metal on your desk where if somebody else wants to use it, it goes to the next desk. You carry it in. So from there to go to, but the whole exercise of computing or working out a quotation was painful. So I said, now I have to do what was done in London, but no technology is available anywhere. So then I started asking people, I want a machine which can do this. And somebody actually did it for me. They wrote a program and then they gave me a demo. It worked. Then somebody else came to me and said, I have a machine where you can work yourself. You don't need to get a program done. I don't believe you. He says, you come, I'll show you. So I went to their offices somewhere in Nariman Point. And there was a techie there and so he asked me, what do you want? I said, so what do I want? And then he was kind to me in a way. He says, can you put what you want into rows and columns? I said, yeah. I said, the column will be year 1, year 2, year 3, say year 10. The row will be income, then interest, depreciation, something like that. And then at the bottom there will be something saying opening balance of loan. Then so I put this in. I still didn't know where he was going. Then he says, the cells, A1 and the rows, is there a relationship? I said, yeah, I can tell you the relationship. This is how it is. So the cost was 1,000, interest rate, you put that below, is 15%. And then I want to project the income statement. So we did that. And I was on the other side. End of the day, this is 1982, mind you. We have not heard of any technology at all. This guy is So he says, okay, this is now complete. Now what do you want to do? So I said, where are you? I went around, and he had actually put all the numbers in. There was what today's world I call a spreadsheet. I didn't know it was a spreadsheet. And at the bottom there is a cash flow of free cash. So he said, now what do I do? I said, now I want to work out the IRR on that. So he's a techie. He has no idea what IRR. Then he types something. He says, no, this is not right. It has to be this range to this range. I can understand his mental thing, but I don't know. I not for the life of me thought that there's a formula for IRR on that machine. So he next puts in something. Oh, I have corrected it. Your answer is 14.6%.
Wow.
And I had given him actual figures, which are very simple. I had to remember only 3 figures. The cost of the equipment, interest rate, depreciation, tax rate. So only 4 numbers, and that was the right number. So then I went in and I said, how do you do this? And he says, and he's typing on like a keyboard. I said, I want this machine. End of story. And then we ran, so that's where we had a good grounding in what technology can do and the power of technology. There's actually a spreadsheet. It was a spreadsheet called SuperCalc, and the machine, the person who supplied the machine to us was Zenith Computers at that time. They supplied me the machine.
Was a techie?
I don't know. It was one of Zenith's employees in their office. I don't recollect the name. Then in 1986, I told Mr. Vagul when he came, we'll computerize the whole IC office. We still use the word computerize. So every person has to have a machine on his desk, and every secretary needs to learn to type on a machine. By then, WordPerfect or WordPerfect had come, and I think
Did you face resistance, Mr. Kamath, on that? Because by the same logic, I mean, in the public sector banks, you know what...
Till ICICI by 1986. 1996, the bank had some exposure to, but the bank resistance was very interesting. Because when he said we'll put technology, and one of the first things that impacted the bank was the ATMs. So we said, we have got some 100 branches that time. I'm still ICICI the parent. I'm not the bank. Thing. And we have 100, 150 branches maybe. And the Reserve Bank in those days gave approval for only 50 branches in a year. So I said the largest bank has got 10,000 branches. At this rate, it will take me 200 years to get to there. So we have to think different. So I said, let's put ATMs around each of them. There was resistance on the bank. The older stuff. I said, no, nobody will use an ATM. Customer wants to come in and do. So I said, no, the customer is looking for convenience. If he can get things done with no delay at all, he's going to go there and do it. And he'll quickly figure out. And we put the first 100 we put 1,000 at a go. And within the first 2-3 days, it was being run from 24 hours, but it was in use till 10 o'clock at night. So stuffing the ATM with money became the challenge. But the customer moved. So we had about 1,500 to 1,700 transactions per machine. And I asked NCR, the suppliers, how many transactions in the West do you normally do before you say, put another one? They said, I didn't tell them how many we are running. I said, about 350, put a second one. They said, no, I can't afford it, but now I know the benchmark. So I can go and put more. So we expanded that. And then we said, the way to counter not having branches is increasing the efficiency of the branch. One, reducing the load on the branch. So at least cash withdrawal load you remove. Then we also put a machine in the branch to do balance inquiry. That was most of the things, go to the teller, apna balance, commercial particularly. You put this and say you punch the number, it will come there. So increasingly we used, I would say, innovation. Then again, now forgotten. We ran the branch 8 o'clock to 8 o'clock at night. 8 in the morning to 8 in the night. 2 shifts. ICICI was the only bank which ran 2 shifts because we didn't have branches. There were 2,000 people visiting the branch. So we couldn't handle the load, so we said we run 2 shifts. Then so the answer is innovation throughout, and it's not me. My team did more innovation than me. So one of my colleagues came in and said, we will avoid the teller. So I said, how will you avoid the teller? Yes, ATM is fine. So we will say that every desk will receive cash, because now the payment is mostly through the ATM. People still come for a check and so on. But where somebody wants to deposit cash, that's also clogging the teller line. There are only 2 tellers. So how do you resolve it? Said every single desk will be a teller. I said, this is crazy. How can that happen? But everything will be under camera. So, okay, describe. They said when the customer comes in, there will be a table on which we will have envelopes, printed envelopes, the name of the customer, account number. It is a flap which says amount written. So, on the envelope itself, amount number, and then the flap also amount number, account number. So, if the customer has to put it. Then he seals it. Then he goes to the desk. The desk officer, then what does the desk officer do? Just stamps the envelope and the receipt, tears the receipt and gives. I said, counting? No counting. Counting will be done in the back office. I said, when? At night. So, all this will go into a sealed dabba, which will be sealed and moved periodically to the back office, all under camera. And this is 2002 or 2003. And I am just looking at this person and I said, jokingly, now I am going to push you out now. I am not going to risk this. By this time, I am the CEO of the bank. I am not going to risk this because I am not comfortable doing this. So I put, let us say, ensure the limit is 50,000 for deposit. So I say I put 50,000 tomorrow, you say 49,000, I am not going to come to the bank. So the person's response, the lady, but response was great. Sir, you never stand in line. So this is a big lesson to me later on, that unless somebody experiences service, all talk of service is a lip service. You have to personally experience, whether it's an app, whether it's this and that. So I don't stand in line. Somebody stands in line for me to deposit the money. So now look at the lay customer anyway. And I said, by then emails had started. Anything going wrong, customers would email me directly. I said, I'll catch this. Nothing.
So they would email you directly?
Oh yeah, by then it had started for various other things. And it was a root cause problem. Then there will be some 50 emails coming in a day. So I'll complete this quickly. So this starts, and then I used to visit branches to understand firsthand what is happening all over the country. So I go into a branch and typical customer would come across and I would ask how are things, customer interaction. The customers would say, sir, only one thing, this envelope thing. Why 50,000? Make it 1 lakh. I said, that's not in my hand. I said, so it's so convenient. So the customer was not afraid like I was that will be short, because for him it was a great convenience. So it became a great success.
It skipped the queue.
Yeah, so it became a great convenience, and they continued for a long time till we got a branch network up and so on. So what I'm describing is an innovation hub. In very many ways, that's what the team...
which was what ICICI then became known for, various firsts.
Yeah, and it was not necessarily top-driven. It was people-driven. It was on the line, people-driven. There's another interesting thing. We ran 8 to 8, and I was very clear that 8 pen down and everybody should go. It was not happening because those days we had technology. So handing over the system was taking 1 hour. I said, why should handing over the system take 1 hour? So breaking my head, nobody is finding an answer. So I was in a branch in Chennai, and so it was 7:40 or so, and there was the manager wasn't there, so the deputy manager, I still remember, she was a lady. She was there, and I asked her, expecting no positive answer, what time did you hand over the system yesterday? She said 8:02. I sat down on the nearest chair. I said, sit down, Did you say 8:02? Says everybody else is handing over at 9:02, 9:30 and so on. How did you do this? It said it's very simple, because I had already passed the thought that I want it shut. And she thought on her own and did this. Said, what did you do? Said the last handing over the system is waiting for certain reconciliation to be done. And that is cash reconciliation, which we used to start at 8 o'clock. And then it may take, depending on number of transactions, 40 minutes, 45 minutes, 1 hour before we shut down. So I said that at 7 o'clock, one team will start reconciling. And only there will be the last few transactions between 7:30 and 8, which will need to be reconciled. But all earlier transactions are analyzed starting 1.5
You
hours.
don't have to do it at the
The
last.
last minute. They're not done at 8. I said,
Small
what a
things.
productivity tool.
Hmm.
He says, we have got some 5-7 transactions or 10 transactions to reconcile at 8. By 8:03, I am done. So most innovation happens when you empower your people and when you get them to do. So that has continued. And then, of course, technology has evolved
Hmm.
and technology has kept going.
And when you had the merger, sir, that was again a huge, completely transformative kind of a step for the bank, right?
Yeah.
And at that time, you were at the helm. What were the key things you had to grapple with during the merger?
See, what I had to grapple with was not during the merger, before the merger.
Hmm.
I had realized that even in the old ICICI, the organizational change was the most painful.
Hmm.
Any organizational change is resistance. Because I don't want to be, out of my status quo or comfort zone. So, but we had done organizational changes so many times since 1996. It became, in a way, the culture of the organization. Change became structural change because there are new businesses coming.
Hmm.
Somebody would go, somebody would get promoted, somebody would run. And when these happened, I would tell Mr. Ramkumar, our HR head, what is the ground level noise? And earlier on, you would say noise is heavy before the merger. And I was actually expecting pretty heavy ground level noise once the organization merged and the new structure evolved and so on. So I asked him, and he would say, nothing, very little or none. I said, how? Then I realized that people had understood that change is going to happen and internalized it. So the merger itself wasn't...
I think there was a lot of faith in your leadership as well.
I think people by then, 6 years into 2002, 2003, believed that, and there was in a way, the 2000 onwards, the growth momentum that could be seen. There was people are feeling good about change and things like that. So I think we rode that change in the merger process pretty well.
How did ICICI also emerge as a powerhouse of talent? Was it because you were the only institution of the game in town that the best of the talent, or was it also some that's
not correct? Because from my experience, banks had a particular way of recruiting which they had been doing for a long time, commercial banks, and I think they were doing a good job. But if you look at the three development banks, IDBI, IFC and ourselves, I described they also had long-standing recruitment of professionals, engineers and finance professionals they had been recruiting. So they had a large core of... I think the difference was really the empowerment that the freedom you were given in a way like a private institution and as a public sector institution. So the way greater freedom was given right from the time I joined in 1971. And that allowed probably a better understanding of how to take risk, how to move on. And and that's very visible in 96 when challenges happened. We quickly set up new businesses and moved on. Whereas others took a little time to...
But the interesting thing is other development financial institutions virtually died after that. I mean, ICICI Bank took that bold step of reverse merging and becoming a bank. Was that kind of a prescient move from your part that you needed? You understood that the days of DFIs in that sense are almost over.
That, the way you put it, that the days of DFIs are over was very clear. Because you were set up at a time when there was scarcity of debt capital and equity capital for developmental effort. So you needed very patient capital. The events of 1990, the opening up in a way put everything into turmoil. And if you look at us, we were basically providing money, raising debt capital from banks and raising money. So that again became a non-workable solution. So yes, what you said is right. It appeared that the days of DFI were numbered. But what was not clear was what next. Moving on to retail was also a risky game because there was no retail player.
Exactly.
Nobody had scaled up on anything retail. But I think one was you were pushed to the wall. And then you started thinking in hyper mode, as it were. And all this would not have worked if the sort of changes that happened in the economy post 2000 didn't happen. Now, what was the key change? The key change was the rise of a class of customer who could now want a retail product.
Right.
And this started with the white collar, I would say, potential in India, brought in by the IT companies in India. So those companies actually pushed the whole process of, and their employees and people who are supported.
Gradual beginnings of an aspiration.
That ecosystem created at least the ability to put down payment and service the borrowing. So we read that in a way, put technology on that, and then
aggressive retail.
Yeah.
Sometimes there was a criticism, sir, that may have been too aggressive. This credit cards and all. Do you subscribe to that view?
See, let me put it this way. It was not too aggressive, but you were operating in an environment where there was no, say, scoring. So there was no scoring process. Yeah. So you had to do your own scoring. So you had to take decisions with limited information. So that sometimes might have gone wrong. And I think there are also times, I'm talking of the early 2000s or mid 2000s, when the customer realized that there are ways in which I can not pay and not be held accountable. So that took a little time. And that actually got corrected when the scoring became strong. When
credit bureaus
customers who had not paid in 2000, 2006 realized in 2009, because we had handed over all the data to credit bureaus, that when they went for a loan, they were told that you got something outstanding. And customers would come and start paying.
Right.
So this
part of the evolution.
was the evolution of...
Did you have a playbook in mind when you look towards West or to the US? This is the kind of bank that you would want to be, because around the same time that the merger happened, there are other private sector banks, the HDFCs, the Portas, everyone had joined the game, right? I mean, so what was that path that you chose? And, what were those lessons?
See, there were companies which we admired, banks which we admired in the US. Because those days, Wells Fargo was known as a very nimble institution. Thereafter, they have had their share of things. Capital One, as a credit card issuer, was known as a very nimble institution. So we went and saw some of these institutions, talked to them what they did different. And the key differentiator was technology, people we had. So we knew that we had to put technology in everything that we did. And even domestic competition, those days what we said will differentiate us is technology. And we took more risk because of limited data availability. But I think it worked for the good. The good and the bad we learned.
Let's cut to some in the present now, Mr. Kamath. I think, you have been in that position where you've seen right from the days when you had to do manual calculators to now when we are talking about AI and the impact it is having across the world in terms of jobs, in terms of various functions. And you have been a great advocate of technology in any case. What would you think are the biggest changes you have seen during your career?
1996, anywhere you looked, the answer was mainframe. We could not afford a mainframe. Good or bad, it might probably. But the fact is we could not afford a mainframe. So I very clearly said in 96, no mainframe in my life. So we will go to, small boxes, Sun Microsystems boxes, which became distributed servers, and they will scale with us. So that became the first start. And you realize that you could now run technology at maybe 1/20th, 1/30th the cost of what global people did, and much more nimbly. So one was mainframe. The second big change actually was the cloud. And, your willingness or unwillingness to embrace cloud. The second. The third, I would say, is open source. Circa 2015. And SaaS thereafter. Now, let's look around today, most global institutions are still making that change. So mainframes, by and large, have been junked, except very large corporations, probably still run some. But distributed processing, is still there, but the move on to the overlay on that, the software to open source is still not there. It is embraced wholly and completely by the fintechs and the digitechs. 100% they are on that. But the old course, including financial institutions of any hue, are still running what they installed in maybe 90s, 2000s,
legacy
late 90s, 2000s. And even in 2010, the same thing was sold. Change that took place between 2010 and 2015, I think institutions are still to embrace. So in 2015, you could actually run a bank by picking technology on Google. Doing a Google search and running technology, or picking technology and running it, was feasible. So if you are not made that change, then you are at least 20 years behind.
The other thing, sir, is that, you have, as you said, you have benefited from great mentors. In fact, you have been a mentor to quite a few. I mean, there has been a long stretch, and particularly empowerment of women, and something which has been always talked about in relation to KV Kamath, is that you had a top team of great professionals who were all women. I mean, is it again something which was accidental, or did it come from a belief which you had?
It's not accidental, and it is not a belief either. It is maybe the culture of the institution where I work. Leaders that have come forward, male or female, I think come from a concept of meritocracy, and that I had seen right from the day I joined ICICI, that meritocracy is the way forward. And second was delegation and allowing people to take responsibility for what they're doing. So these two, I think, to me, are foundational to growth of leadership. The gender mix and the women leaders that have come from ICICI, I think, were a consequence of increasing participation of women in professional courses. And very, I would say, diligent practices to make sure that you don't have a gender bias. I'll give you a couple of things. And one other thing helped it. A large intake of professionally qualified accountants, chartered accountants, where if you look at the top 10, I think there was, in a particular period of time, 90s, so more women than men. And we used to actually understand, my seniors would offer, Mr. Wagul's team, offer the top 10 like a sight unseen, put an offer letter to them. And so we had a lot of women who came in through that route. So there was a large pool of women professionals, and we made sure that there was no gender differentiation. So everything was on merit. So nobody was allowed to prejudge this job a woman can't do.
And most of it became leaders in their own.
Because that empowerment was there. There is nothing that a woman can't do. Including when we ran 2 shifts, we said it's a woman's choice. We have a role for her in the first shift and the second shift. And the women stood up and said, yes, we are happy to do this, because they were by then professional minded and career minded.
Which is often said that not very many organizations say it, they start judging it from before, that this will not be able to be.
And I'll give you another classic situation. I remember we were opening a bank branch in Goa somewhere, and the team wanted an all-women's branch. And I had huge objection from, I don't know which part of the bank, maybe HR at that time or somebody, who said, no, or intermediate leadership. No, can't work, late working, that hours. I said, call the women and ask them, are they willing to run an all-women branch? There'll be a branch manager, the leadership is women, everything. Absolutely, we will run it. And that became like a trend. So there are so many places where you take decisions without asking women whether this is something certain. I'll give you another, my first lesson in this, that you need to look at it in a neutral way, was right in 96 when I came back. And those days, project appraisals, we had nothing else to do. Every month, appraisals would go to the board, projects would go to the board, and some 15, 20 would go to the board. And they would be sent on a Thursday. So previous Saturday, Sunday, you would be sitting in office clearing it. I mean, clearing means line by line, I would edit. There were 2 or 3 people who did it, put it up. And there were project leaders who were women. So one day I was sitting with, I think 3 men and maybe 2 women and clearing things. And I asked one of the ladies, I still can picture her face. I said, what time did you go home yesterday night or previous night before you circulated this? She says 2 a.m. At that time, Mumbai wasn't very comfortable, 1996. So I said, how did you go? She said, I took a taxi and, demeanor, everything was normal. And I didn't ask the next question, were you comfortable, not comfortable? Because that is now, I am now assigning things. So I now know the facts. 2 o'clock and I see no body language which says that she was uncomfortable doing that and so on. But then I said to myself, but I am uncomfortable. Now, but I don't want to stop this on gender basis. So I quietly called my admin those days, not HR, and said, for anybody who is working after 10 o'clock, male or female, you do a drop home. You have one of these white taxis.
It's not even about gender.
Drop. So that started the thing at 96, we put it into effect. And we didn't say that this was for us. Similarly, weekends, 96, 97, 98, by then we had moved to the new office building in BKC. I knew that they were sometimes working Saturday, Sunday, and they had young children at home. So quietly we said, let's open a creche. And actually some of my male colleagues said, can we bring the child and can we leave it? And of course. So you can drop the child, your wife can, if a lady employee can drop the child, whoever. Again, gender neutral. The creche is gender neutral. The parent can drop the child or whatever is the gender of the parent. So lot of these things came out of, most of this came out of people things. But to me, again, the biggest neutrality came through another recruitment thing that we did. We did 2 things because we were not getting skilled people to get on the front and the officer cadre in the branch. So we codified all our teaching material and gave it to NIIT. Said, you run programs, 6-month programs, 8-month program you design. And we will take the entire lot for the first few years. Then we will see. First few years we were producing 5,000-7,000 people and we took them in. Because by then we started getting approach of 500 branches from the 50 or more. So we took them. Now we had so that got satisfied. Now we have a problem with managers. Not enough managers. We need to train that. So my HR came and said, we will tie up with the university now to do a 1-year program for preparing somebody who can be a branch manager or a deputy manager. So I was skeptical. I said, but where are the people who will get to this school? Because we want good quality. I still remember his answer. He said, sir, you are looking at things with a city view. Basically, he told me you're wearing blinkers. He was not that crude. So he says, you go to rural India, there is a lot of good talent which has no opportunity, cannot come out. I said, valid point, but not verified. So the only way to verify is test it. So I said, okay. So as he was going out, I said, one condition. I said, you will administer the test in vernacular with a choice of English. Any vernacular that they want. You should be able to do it across India. He said, okay. He had stepped out and I said, come in. I said, you will advertise only in the vernacular press. No English advertiser. Because you say your
want to go out.
thing is one. And I was very eager. So 3-4 weeks later, I could bug him. So he says, applications have come in. I said, how many? 1 lakh applications for 1,000 positions. And I said, administer the test. He administered the test. And he said, 10,000 of them have done better than what, say, a tier 2 school, MBA or whatever does. And that was like a validation that there are people. So I said, start the program. So he was in Bangalore. We tied up with Manipal University to do this. And so quickly, in a year's time, there was a graduation ceremony. And this colleague of mine had actually done a before-after interview, a video shoot. So before, they're trying to talk to the incoming class individually in English. answer is in our vernacular. And the exit interview in English is fluent. So subject matter, computers, technology, banking, and English, some degree of nuance. I think that prepared the core. That is not it. That was almost completely gender neutral class. So suddenly you are not looking for, where is the male code, where is the thing. Your class that you will now put in front of the customer was gender neutral. So a lot of things have happened because my colleagues took initiative and they drove it.
A couple of last few questions, Mr. Kamath. One is, of course, during the course of this illustrious career, you have met several industrialists, most of whom, or nearly all of whom, are clients of ICICI, have been customers of ICICI. You have had personal equations with many, many of them. What has been your sort of understanding? What has been your takeaways from these relationships, customer relationships, client relationships, which have been there with you for years? Because you're tremendously respected as a banker.
Almost without fail, every client that I have come across, there is a very deep entrepreneurial quality. 90% of them might have succeeded, 10% might not have succeeded. But that entrepreneurial quality is what differentiates them from the ability to take risk, ability to face challenge, to overcome challenge, and not be cowed down by constraints is the experience right from 71 to date. I think that is and some of these learnings I have tried to put in my own things. Everything that I have done is there is
and also
all full of
navigate change, I guess.
Yeah, navigate change and facing constraints. Navigation change is consequent to a constraint that you have in front of you. So you jump higher, you change course, and you keep moving.
And some of that you have implemented in your own careers as well as you went along.
So one question, when you joined ICICI and then it merged, you said it was a depth of development financial model. Today, as we speak, the markets where it is, and corporate not going the term credit way. Can we say the death of typical bank lending corporate credit culture is over, and this is the new era of retail banking or consumerization that's going to change and redefine banking as it is?
Yeah, in a broad way, you're right. But let me put that into context. Why is that happening? You see, we were capital starved, debt and equity capital for most part of my career. Certainly the first 40 years up to 2000. Then there was some improvement in corporate credit, but then infrastructure happened. So again, you were debt starved. Post 2014, balance sheet started getting cleaned up. The structure started coming in place. COVID was a defining moment when companies decided that we now can actually reinvent ourselves. They became more efficient, more profitability increased significantly. They paid down debt. So post-COVID, a miracle happened. When you looked at 2022-23, suddenly you found that balance sheet of both the bank and the corporate was cleaned. So what was the twin balance sheet problem? Suddenly both balance sheets now were rosy, and that has endured. Now, what is the main outcome of, or what is the result of this? The result is very simple, and we are still not writing about it. And I would encourage you to take a cue and look up and see whether what I'm saying is right. Corporate cash flows are now so healthy. I have never seen such healthy cash flows in my life. Now, having done project appraisal for most of my life, at least the first 20 years, 25 years of my life, I can say that the free cash flows today are good enough for most expansion that companies have. 10, 15, 20, 25, 30% expansion by adding some balancing equipment, some modernization, some small plant. They can do without going anywhere. Working capital also they can meet themselves. Some incremental working capital they may go to a bank. So by and large, unless it's a very large steel factory or a plant which requires, I would say, upwards of 10,000 crores of investment, most things can be done through in-house funding. Now, side by side, what has happened is, post-2000, with the slow rise of the mutual fund industry, the insurance industry, the pension industry now, you have got access to capital market and they will subscribe to whatever instruments you bring to the market there. So that has transformed everything that has happened in this country in the last 5 years in particular. And that flow to these capital market sources is increasing. So a corporate now finds it convenient to first meet needs through his own cash accruals, then go to the capital market and meet these. And corporates also learned that too much leverage is not good. And now they have built scale. So they don't have to now build another plant at scale. And incrementally is enough. So all this is happening together. And as a result, we are not seeing them come to the bank, but we are also not seeing them spend money on their own. They are spending money through free cash accruals. That's happening. So for the banks, then what is the option? The option is retail. The banks and NBFCs then become purveyors of retail credit, which is what has happened globally. Primary function of a bank is take in retail deposits and lend to retail and also facilitate commerce and transaction. So that, I think, will continue to be a strong business opportunity for banks here as we go from 5 trillion to 10 trillion to 15 to 20 and thereafter. So banks will be having a lot of business, but the type of business will change. And it has to be technology oriented if you're dealing with the retail customer. So there is change happening, change that has already happened on us. And corporates will continue to, in a way, infrastructure funding now becoming slowly independent of the banks is good. Because you are actually earlier casting a burden on the banks by asking them to lend infrastructure. Because the average maturity of a bank deposit is 1 year. If you take FD and now for 50 years, 60 years, we have been saying that's all right. We have no option, but you please lend long. And you use term transformation. You have floating rates, so you reset interest rate. Risk both to the borrower and the lender. So now you are in a situation where you can lend as per your matching your ALM preference. The corporate can borrow matching is its preference. So I think we are in a holistically balanced position now.
Last question, Mr. Kamath. You have been a major votary of the India story in that sense. You have shaped it in your own way through the career as well. What is your idea of India and where it is headed now in terms of the goods?
I put it very simply, and I've seen transformation while I was at ADB, back home, and then in my last assignment. See, if you look at 3 stories, and one of them is ours, Japan, late 60s to 1990. Inflation was at 8%, interest rates were at 8%. And then the acceleration happened in growth. By early 90s, both inflation and the interest rates had dropped to zero and growth tapered off. So what happened to growth? Basically, everything that you had to invest was invested. So lesson number 1 is over a 20-25 year period, most development happens. So whether it is roads, bridges, airports, ports, whatever you want gets built. Cities get transformed, urban rejuvenation happens and everything happens. But the currency gets stronger, the interest rates drop, inflation also drop. Experience. China. Transformation started in 2000. By late 15, 18, most of it had happened. Same numbers, 7 to 8% inflation, 7 to 8% interest rate in 2000. Then growth kicks in, growth goes up 10, 11, 12, 13. Those may be difficult for a country to achieve. But all 10, they achieve. And got built. Cities got transformed. In the city, all urban infrastructure got rebuilt. Then ports, roads, airports, et al. Everything got built, got cleaned up, and so on. 15, 20 years. It's now our turn. And we have started just maybe 2-3 years back. Our process has happened, actually speaking, post-COVID.
True.
Post-COVID. And now things are happening at speed. We don't sometimes put in perspective. Each city, each town should put in perspective. For Bombay, for Mumbai, if I were a spokesperson, I'll say, 2020 June, there was no coastal road. I could see from my window during the COVID period, the first stones being poured into the sea to build a coastal road. 3 years later, the coastal road was functional. and 4 years later, fully functional. I couldn't dream that in 4 years we would have a coastal road and I could drive from airport, international airport, to the southern tip of Mumbai in less than 35 minutes.
Absolutely.
Then I remember just before COVID, for some reason I took a flight, a helicopter flight across the creek, and I could see the first signs of the Atal Setu, some initial signs of the Atal Setu. 3.5 years later, that is built. So we now are actually building things at speed. Now, what is now taking 3.5 years, if we can do it in 2 years, great. And this is happening now across the country. If you take actually nobody has done. If you ask one of your team to take a drone shot of all highways in India, and the job is only to fly a drone across all highways, you will see the progress that has happened. There is transformational what has happened. Yeah, there is still more work to be done. So, and we got another 20 years. So that answers your question that the unfinished agenda of the next 20 years will take us from 5 to 10 to 15 to 20, 25.
What next for KV Kamath?
Nothing. I think I'm enjoying what I'm doing. As long as I see there is purpose and I contribute, I will contribute.
And you're doing that and much, much more, inspiring many, many people in the process, Mr. Kamath. Thank you so very much for this absolutely wonderful conversation.
Thank you, sir.
And congratulations once again from us.
Thank you.